A highly contentious range has led to flatter price action in the mid to lower 50s over the years. Even when there are more defined reversals, there is often delay in forming an established trend in the long term. This is seen for almost a full year when there is natural resistance encountered. However, it takes some time for a sizable downtrend to develop in the longer term context. Crude oil futures allows for an example to see candle price action alone and not necessarily rely on volume. Though even without volume, the strength of this break over 56 can clearly be seen with the large green candles and the gap in between their real bodies. Next, there is the characteristic bearish to neutral range that consolidates higher following a successful support, which sees the market stabilize and lead to a bullish continuation. It is another strong bullish move. Once again, volume is not entirely necessary to make inferences about the strength. These rows of consistent and large green candles are quite adequate. A clear upward channel further emphasizes the sustainable bullish strength. Highly valid trend lines can be drawn close to the real bodies of the candles that form up and down swings. Similar to the earlier horizontal 50s range, additional trend lines can be drawn within the channel for further detail. After the break under the upward channel, there are a series of downward continuations towards the 50s range, which still remains highly contentious. The greater presence of dojis in this area also points to continued indecision. Even without large red volume spikes, it becomes clear the market becomes oversold. Large red candles and rows of red candles with gaps in between them point to unsustainable downward overextension. Also, when the market begins a considerable upswing, there is the general U-shaped price action of a morning star, that is, from a combination of a harami and bullish engulfing.